Good morning, people. Morning. It is July 9th. It's Tuesday, 9 and a bit, 9:03 a.m. Eastern Time. And this is going to be day one of Jerome Powell's testimonial that comes around at about 10 a.m. Eastern Time, if I'm not mistaken. So markets have been continuing to make new all-time highs, right? We saw a new all-time high on the overnight in both the S&P and the Nasdaq futures here. We keep chugging along, lower volume, getting imbalanced at these highs, and all important news events, let me just move this, all important news events are starting to flurry today, right? They start today until the end of the week. We got Jerome Powell day one. Jerome Powell day two is tomorrow. CPI pre-market on Thursday. PPI pre-market on Friday to wrap things up. And this is what the market is most likely waiting for. Yesterday was a lower volume, very slow day, and we're just waiting to see how this news unfolds into the end of the week. So from a holiday week with low volume and no news to this, right? So it's going to be pretty interesting starting today in these markets. There could be a decent amount of volatility and movement, so we got to keep that in mind. We have, what is going on here? We have Fed Chair Jerome Powell. Like I said, he testifies today before the Senate Banking Committee in a hearing likely to take stock of whether recent signs of slowed inflation and slowing U.S. job markets will prompt the central bank to accelerate its plans to cut rates. So we just had our last Fed meeting, June 11th to 12th, and the median projection of the 19 officials was for a single quarter rate cut by the end of the year. But since the inflation data has come in weaker than expected over the past, I guess, week or so, we still need to see the data for, and last month, we still need to see the data for this coming week before we can kind of see that this trend is actually continuing. And several policymakers, including Jerome Powell, have begun to notice concerns about the slowing of the job market. Last week, we had the non-farm payrolls. Unemployment rate popped to 4.1%. During last week's data, we still showed a healthy, quote-unquote, still healthy 206,000 jobs added in June. But the revisions to the prior month show that the trend is lower, and Powell, in a recent public comment, said the U.S. might be at a point where further weakening in the economy jumps into the unemployment rate, which is, like I said, slowly on the rise from 3.4% in April 2023 up to 4.1% in 2023. That was a 55-year low match. So the consumer price index, right, did not rise at all in May, and analysts anticipate another weak reading when the data for June is set to release this Thursday. So it's very much understood by us that we have two-sided risks, said Jerome Powell last week, capturing a sense among Fed officials that they can no longer be solely focused on lowering inflation and deciding how long to maintain their current tight policy and monetary policy, but must also consider how rigorously to guard against the slowing of the economy too much. So we'll see Jerome Powell in a two-day event this week, right, starting today, and that's going to give us a little more clarity in terms of what is to happen along with the inflation data that's set out to come out later on in this week. Now, in terms of some of the other aspects, right, what can we say about the most recent news that we have? We saw that air travel, right, continues to surge this year. More than 3 million passengers were screened nationwide in the U.S. by the Transportation Security Administration on Sunday, marking the busiest day in the agency's 22-year history. The TSA saw 8 of its 10 busiest days in record in 2024, with the number of travelers crossing pre-pandemic levels as a result of cheaper flight tickets and hotel prices. While many investors may have expressed concerns about the economic slowdown, TSA boarding pass scans can provide an upbeat data point for the economy, according to Apollo Asset Management. JP Morgan also sees stronger oil demand due to revenge summer traveling. Speaking of oil, increased demand may not be enough to help big oil, with BP expecting to book impairment charges of $1 to $2 billion for Q2 amid significantly lower refining margins. And the news has sent shares down 4% in pre-market trading, while upstream production is projected to be broadly flat sequentially. BP's forecast came just days after ExxonMobil guided for lower Q2 upstream earnings, also hurt by weaker gas prices and refining margins. And elsewhere in the sector, Devon Energy announced that it will acquire Grayson Mills Williston Basin business in a $5 billion cash and stock deal. So oil, right, with all this summer traveling, could be on the rise. We could see a strong oil seasonality as it already has started over this past several weeks. We can take note of even like if we look at just USO to begin with, we can look at futures, but they've been steadily rising over the past few weeks here. We haven't necessarily ran through the most recent highs. That's creating somewhat of a triple top, if you want to call it that. But with this higher pressure and demand that's expected to come out throughout the summer seasonality, there could be some more anticipated movement to the upside, and that's what I'm kind of betting on here. I could see oil back towards that $90 to $100 range towards the end of this year even. Now, with equities. Yesterday, excuse me, was a much slower day overall. Markets did rally into a new all-time high not pre-market, that's ridiculous. Pre-market and throughout the trading session in itself. So we saw a rally yesterday into all-time highs before we saw a little slump, but back overnight we're into all-time highs. So we got some news as well. Oh, sorry, not some news. Some comments here. Yeah, like I'm not necessarily sure how long Jerome Powell's going to testify. I imagine it's going to be like an hour or something, but it is not the, I guess, best trading conditions while he's actually talking, because by the time you understand what the news actually means from a market perspective, it's already moved, which is actually a solid thing about order flow, because you can see where the large orders are coming in and who's most anticipated to actually move the markets off that. But I would say start slowly in the morning, right? I think there could be some opportunities while he talks, but just like take it step by step. Another thing to mention here, big tech overall yesterday, they tried to continue this upside momentum. I think that markets, right, when we have multiple days of just continued upside, if you take a look at like the S&P 500 futures on a day-to-day basis, you have how many green days in a row right now, right? These are typically, after we make all-time highs like this, pretty strong, just like low volume exhausted moves that do tend to pull back. So I'm not saying just continuously short this as it rallies, but there could be, if we start breaking distributions, I'll show you very soon on the volume profiles, but you start breaking distributions, you can find those kind of easy shorts that take down those like low volume longs. But like big tech can't roll over. Nvidia is trying to make a move above that 131 area. I like it, right? I've got some calls on this to see if we can move into those highs before markets actually capitulate. Nvidia is one of the ones that's lagging a bit behind things like Apple, but Apple's still strong. Look at this freaking monster just turned around yesterday's red day from the morning session. You can look at, that's not Microsoft at all, but look at Microsoft still hanging around all-time highs. Google, right, barely red. Nothing has turned over super aggressively, right? So without these guys turning around and equities actually accepting distributions lower, the Nasdaq futures aren't going to fall. The S&P 500 futures aren't going to fall. And you continuously shorting into these all-time highs is going to be painful. So how can we short this all-time high, right? What's the opportunity here? We did it yesterday, and there's a possibility to do it again today. As long as we can hold under this 36, 34 area on the S&P where all this imbalance is created, you can see all this delta traded, right? Huge delta here. So these imbalanced areas, if we can actually reject and hold offer under these areas, I would be honestly looking for that pullback into that like 15, 16 area realistically. We've got a lot of imbalances that are sitting around here, around this naked point of control at this 24, 25. It's an important level. But we have a lot of at the ask delta that has been accumulated at these highs, right? Market buying, aggressive market buying into these highs that continues to get accumulated and ultimately fails. Now, I'm not saying continuously short these all-time highs, but there's a good opportunity under this 35, 36 area to start to see if we can go and ping these guys potentially down to 5,600. Who knows? Jerome Powell's coming on today. There's going to be a lot of news behind that, so we got to stay diligent and disciplined around his yapping and his testimony, because that's realistically what the market was waiting for yesterday, and that's probably what's going to move markets today, or so at the beginning of the session into the morning session. So although I'm bullish, I'd rather be bullish from lower prices rather than try to jump into these high areas right now. So if we start moving under key distributions and imbalances, it looks like an opportunity to see some of these short guys into that 53, 36, 35. We can actually hold an offer through that area. It looks solid. So let's open up our live trading room. I hope to see you all in there. Check out community.tradeproacademy.com for our open Discord. And I'll see you guys tomorrow to talk about what happened today and throughout Jerome Powell's testimony today, as well as gearing up for his testimony continuation tomorrow. So I'll see you guys then. Enjoy the day. Trade carefully into this morning session. It's going to be probably like slow chop until he gets on the wire, and then a little more volatility, then we'll see. So just keep that in mind. From 9:30 to 10 a.m. Eastern time, could be a bit meh. So I'll see you guys there.